Today I'm gonna show you the exact two indicators that I use to become a profitable day trader, get funded, secure dozens of payouts, and that helped me generate multiple six figures in total profits. And no, this is not some paid indicator or overcomplicated strategy that no one actually understands. Just two simple indicators that are proven to work. Because in trading, when you find both something that is effective and repeatable that happens over and over again and actually works in the market, you can make serious amount of money. So without wasting any time, let's jump straight into the video. So before we go on real chart and live examples of the trades and indicators, I first need to show you my verified tracker. As you can see, I made more than $250,000 with using this strategy with an 80% win rate. And as you can see, I successfully average every single month, almost every single month, $30,000. As you can see, this one was 33, this one was 30, this one was a little below 30 because this was extremely hard month for me, and then April, it's still not over, I made more than $20,000. And also you can see many proof of payouts. So with this being said, I'm gonna break down everything step by step so you can do the same thing. So first indicator that we are gonna use is gonna be ICT, kill zones and pivots. So once you come to the training view, you're gonna open the indicator tab, you're gonna type ICT kill zones and you're gonna see ICT kill zones plus pivots. This is gonna be the first indicator that we are gonna use. So the first thing that you need to do once you come to the settings of this indicator, you're gonna see that this indicator is gonna show the Asia session, London session, New York AM session, New York lunch and New York PM session. So we are not gonna trade New York PM or New York lunch, so you can easily turn off this and you can just turn on the Asia and the London. So we are only gonna trade New York AM session Eastern time from 9:30 AM Eastern till 11 or 12 o'clock. And the reason for that is because the most powerful and the most efficient moves are gonna happen after the 9:30 AM Eastern time, and is the easiest way to make money. So what this indicator is gonna show you, this blue box is gonna be Asia session and this red box is gonna be London session. So this high of the blue box is gonna be Asia high and this low of the blue box is gonna be Asia low. Then we have this high of the red box, this is gonna be London high, and this low of the red box is gonna be London low. So how this indicator is gonna actually help us is because usually in Asia session there is low volume in the market and market is just gonna start to chop around. You can see there's no hard highs, hard lows, we just generate liquidity. So the main liquidity zone is gonna be above these highs and below these lows, and all this in the middle is just noise. So what many traders are gonna see at the moment, even if we replay the price over here, they're gonna wait for the breakout above these highs or maybe breakout below these lows. So you can see if they waited for breakout below the lows and placed short positions, they're gonna lose. And also traders who are waiting for the breakout above these highs and place long position, they are still gonna lose, because that is how this session works. And usually most of the time, not every single day, but most of the times they are gonna be main draws on liquidity. So once the market sweeps high or low, it's gonna move to opposite direction, and that is how we're gonna use this in our advantage. And also you can see the same thing with London session over here. We came before 9:30 AM Eastern time, we swept these highs and many traders thought that this is gonna be continuation of the move or breakout above, but no, this was just manipulation. And then immediately after market took out the highs, it retraced all the way back to this entire range and then again moved to the upside. So market is always bouncing from one liquidity to another, and if you don't know where is liquidity resting, you can simply, once you find the trade opportunity, you can just target these highs or lows if they are not taken out. So you don't need to guess where the market is gonna go to, because usually most of the times it's gonna hunt these highs and these lows. So it's gonna be way easier for you to catch winning position. Also right now I'm gonna turn on New York AM session just to show how many points we're gonna move in New York AM session compared to these two sessions. So you can see this is the low of the Asia session, it's not taken out, and also we have London low that is still not taken out. So what we're gonna do right now, we're gonna wait for probably sweep of these highs of the London session and then wait for entry opportunity targeting these lows. So if I play the price, you can see that is exactly what happened. We took out the Asia highs, we took out the London highs, and then this is not in trading session, this is just for example. If you take a short after we sweep all these highs and you just target the opposite liquidity, most likely you're gonna be in the right direction of the market. And as you can see, that is what happened. And also if we drag the measure tool, you can see that in Asia session we barely move for 100 points. In the London session it's pretty much the same thing, 100 points. But then in New York M session, where manipulation happens and the right moves, we move for about more than 200 points. So it's always bigger move. You can see here Asia session was not even 50 points. The same goes with London session. And then New York M session move for around how many? More than 200 points. So you can see the clear difference. Okay, so right now once you understand how we can take advantage of the first indicator, ICT kill zones plus pivots, and you know that every single time when we have high or low in the market that is inside of session, that's gonna be very meaningful draw on liquidity, so you don't need to guess what you can target. So right now we're gonna align this indicator to this one over here, which is gonna be called power of 3 indicator. And essentially what this one is gonna do is you just need to choose time frame. So let's say you choose 1 hour time frame, 4 hour, 50 minutes, whatever you are trading at the moment, and it's gonna show you on that candle where is the open, where is the closure, and where is the highest and lowest of the candle. So let's say for this example I'm gonna choose 1 hour time frame and I'm gonna turn on this indicator. So you're gonna see where the candle opened, what was the highest of the candle, what is the lowest on the candle, and then on the closure you're gonna see essentially where we are gonna close. So how is this actually gonna benefit us and help us to determine where the market is gonna go to? And the answer is very simple. So every single 10 a.m. Eastern candle, it's gonna close a new one, it's gonna form. So what this means is if we sweep all the sell side liquidity, so this is gonna be all the sell side liquidity, Asia low, London low, let's say this low over here, and we are delivering from, let's say, this bullish fair value gap. As you can see, this is bullish fair value gap, and we want to target the opposite liquidity, which is going to be this trend line liquidity and the London session highs. That means that the open of the 1 hour candle, it's going to be below here, and then we are anticipating that market is going to expand to the upside and then close like this, which means market is going to target this liquidity. So right now we're going to scale on the 5-minute time frame, and as you can see, this is going to be the open of the 1 hour candle. So this is the open, and this was the lowest low of this candle, which means if we took out all the sell side liquidity, that means that most likely if we opened here at this level over here and then traded lower to take out all the liquidity, now what market is probably gonna do, it's gonna be move to the opposite side and then close below. So we are gonna see expansion on this next 1 hour candle. So there is still just one more thing missing, and that's gonna be entry, which is gonna be inversion of the fair value gap. So if you are truly bearish over here, market is gonna do what? Market is gonna come here, respect this bearish fair value gap, and then move the price lower. But if you are truly bullish, what market is gonna do with this bearish fair value gap? It's not gonna respect this gap, it's actually gonna disrespect it and inverse, and then we're gonna take hard shade exactly after the closure. So you can see this is still not a closure because this was just weak, but we just need to wait for the full closure. And here we go, this is the exact confirmation, and this is, as you can see, also if you pair it with the power of 3, you can see this was the open, this was manipulation over here, and now we are waiting for expansion. And then immediately after you see this inversion, you can place a trade here. Stop loss always goes below that inversion, and like I said, you can target internal liquidity or you can target the London highs because this is very meaningful drawn liquidity. So if we play the price, you can also see how this power of 3 candle was supporting the price. So let me quickly break down the power of 3. So essentially market is always first generating liquidity. So let's say this happens in Asia or London session. So market is generating liquidity on highs and lows. And then at 10 a.m. Eastern time, what market is gonna do? Market is either gonna manipulate the price higher or manipulate the price lower. So let's say in this example, we manipulated the price lower like this, and then we are gonna search for entry model here after the manipulation, and we are anticipating that market is gonna distribute and hunt the opposite liquidity. And that is power of 3. So first we had accumulation generating liquidity, then we had manipulation move, and the third phase is going to be distribution, and we are always targeting the opposite liquidity. So this is power of 3, and this is how the candle forms in the market. And that is exactly what happened in this candle over here. So you can see first the open of the candle was here, and then we traded below to sweep all the sell side liquidity, this sell side, this sell side, this sell side. So every single sell side liquidity was taken out. This is manipulation move, this one over here. And right now what are we waiting for? We are waiting for distribution and to hunt the opposite liquidity and then the closure of the candle. And as you can see, this is how it ends up playing out. So the next example, you can see we can start from, let's say, 1 hour time frame, and you can mark this fair value gap. So as you can see, this is the bearish fair value gap on the hard time frame, and if this gets respected, that means that we are going to target what? We're going to target the session lows, which is going to be the London low, as you can see over here. Also, you can see that we have many lows stacked over here. So this is going to be the trend line liquidity. So we can easily target these lows. So I'm just going to scale to the 5-minute time frame. So this power of 3 candle is still going to show the 1 hour candle. So we just need to wait for the closure. So 5 more minutes. And this is the next candle. So you can see we are respecting the 1 hour bearish fair value gap. We took out all this buy side liquidity, so all these highs are right now taken out, plus session highs are taken out, which means the first presented fair value gap is gonna be what? It's gonna be this bullish one. So if this gets inversed, we can easily take a trade. So we are just gonna wait for the inversion, and as you can see, this was the opening price of the 10 a.m. candle. This was the highest price of that candle because we made a manipulation. So what are we waiting for right now? We are waiting for distribution. So I'm gonna place my trade here immediately after the closure. I'm gonna place my stop loss above the fair value gap, and I'm gonna target, let's say, 1 to 2 risk to reward, or you can extend the final take profit or leave a runner towards the London low. So if I play the price, you can also see how this 10 a.m. candle is looking like right now. This was manipulation. So you can see first of all, it started with generating liquidity, which was over here. Liquidity was generating, as you can see, and then we made a manipulation. This was the highest of that 10 a.m. candle, and then we got an entry model, and we are anticipating that market is going to distribute and hunt the opposite liquidity. You can see this is very simple, and if I play the price, you can see at the end London session low was taken out. So that is essentially all you need to know for these two indicators. First one, ICT yield zones and pivots. It's going to show you the session highs and lows, which are the most meaningful draws on liquidity that you can have in the market. And then after the 9:30 a.m. Eastern time, what this power of 3 is going to show, it's going to show how this candle forms, where is the manipulation, where is the high, and where you can expect that market is going to draw to. So if you align everything like I showed you, and if you also include the fair value gap inversions for your entry model, you can have extremely high win rate. So that's gonna be it for this video. I hope that you liked it. If you did, smash that like, subscribe to never miss another banger on the channel, and until then, I'm gonna see you. Peace.